Welcome to another edition of Crypto Buzz by Kalkine TV. I'm Sage. And the Australian government released its budget last week, and it seems the digital economy was one of the winners. $18.6 million has been allocated to protect Australia's national interest in critical and emerging technology standards, which could include crypto and blockchain. The Morrison government has invested more than $3.5 billion in digital initiatives since 2020, which has helped the momentum of growth in the digital economy. In this week's show, we'll do a global news roundup, as well as take a closer look at how scarcity works to create value for crypto. We'll also investigate into how blockchain could democratise the film industry, taking a peek at content-focused cryptos, Tether, mContent, Contentos and LivePeer. So keep watching till the end. The Bitcoin 2022 conference will take place in Miami this week, known as the largest Bitcoin conference in the world. The lineup includes speakers from MicroStrategy, President Bukele of El Salvador, Palantir and PayPal, Cathie Wood from ARK Investments and more. Over to the UK, who has announced that they will be planning to make the UK a crypto asset hub, and this will include moves to see stablecoins used as a valid payment method. The global governments are finding it difficult to ignore the cost effectiveness and efficient method of transfer digital currencies can be, with stablecoins usually being pegged to a fiat currency. And with the appropriate regulation, the UK wants further adoption of this emerging technology to remain safe and open opportunities for the consumers. Scarcity is a driving force of value for crypto, which is one similarity it has with the traditional markets. But scarcity varies between altcoins and Bitcoin. Bitcoin's finite limit of 21 million coins makes it seem like a digital gold to some. There are about 2 million tokens left to mine of Bitcoin, which is projected to complete sometime around the year 2100. And during inflationary times, when the value in fiat currencies can be reduced, the scarcity of Bitcoin can increase its potential value. Other factors impacting the price of Bitcoin are use cases, the Bitcoin halving cycle, which happens approximately every 4 years, and there is some correlation to be seen between the price of Bitcoin and its total mining hash rate. You can check out the graph at www.hashrateindex.com for more information. Ethereum changes the dynamics of scarcity, however, with its burning of tokens to reduce the high gas fees caused by network congestion. And Dogecoin, on the other hand, is reportedly providing an infinite supply. Its meme coin peer Shiba Inu has 1 quadrillion of its SHIB tokens when it launched in 2020, and half of which got locked in decentralized exchange Uniswap, and the other half was given to Vitalik Buterin, Ethereum's co-founder. It was reported by CoinDesk. It's interesting to note that the volume of Bitcoin on the exchanges has been decreasing over the last 2 years. The available Bitcoin to access via exchanges is at the lowest it's been in the last 3 years, being at about 2.3 million. That was reported by Seeking Alpha. And this could show that demand is about to outweigh supply, which proves that not all the Bitcoin mined is in circulation, with about 20% having been lost in wallets. Reports show that there is approximately 15 million Bitcoin circulating, although close to 19 million have been mined. And on to price action. Bitcoin has been in a sideways price action over the last 3 days, which could be good for the altcoins if Bitcoin can keep its daily close above the $45,000 level, with Bitcoin's market dominance being around 40%. It provides opportunity for the altcoins to lead the market in the near term. Some analysts see Bitcoin's ability to stay above its 50-day moving average of about 42,880 to be a bullish sign. However, it would be better for the altcoins run if Bitcoin's price stays closer to the 45,500 level before it prepares for its potential next step up to 51,000. The price of Bitcoin today is approximately $46,612, up 1.4% at the time of writing this report during the Asian mid-session, and over the last 30 days it is up 18%. Over the last 12 months, however, it is down 19%. This is data from CoinGecko. Hard to believe Ethereum's price was close to $140 this time 2 years ago. It's climbed about 24% since the 11th of March, and Ether rose again after a dip down to 3,200 on the 1st of April. and has been trading sideways over the last 3 days. The excitement over the merge and testnets, including software upgrades that will change Ethereum's mining consensus from proof of work to the less energy-intensive proof of stake, has been in development since 2015 and is scheduled to happen sometime in 2022. Many experts are expecting the price of Ethereum to increase significantly once complete, as it opens up the protocol's ability for many more transactions and use cases. The price of Ethereum today is approximately $3,516 up 0.7% or thereabouts at the time of writing, and over the last 30 days it's up about 31.7%, and over the last 12 months it is up 69% according to data from CoinGecko. We've now reached the time for a short break. Do stay tuned, as after the break we'll take a look at the watch to earn phenomenon with Tether TV, M Content, Contentos and LivePeer.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google, to brand new tech startups vying for your attention. Kalkine's TechBeat has the latest in what matters in the world of technology. Join me every single Thursday on the TechBeat, exclusive to Kalkine TV.
Welcome back after the break. So you may have heard of play-to-earn games such as the Australian protocol Illuvium, which raised the roof in 2021. Could the era of watch-to-earn be approaching? The film industry is one that has been rather exclusive for several decades, run by major studios. It was very difficult for independent artists to make a break and gain returns on investment due to market dominance from studio productions and distribution channels. The film industry has been gaining from technological advances since the 1980s, including upgrades from VHS to DVD, beta to HD and 4K, and more recently the streaming services. Also notable is a switch from the cumbersome 35mm nylon film to digital in the early 2000s, which was quickly followed by advances in editing, animation and video special effects. Many agree the film industry could do with more democratising, which would alleviate the expensive and limiting procedures to allow for a more fluid flexibility where users can take control of their content with the aim of bringing more liquidity into the sector and even to the fans. We're seeing the sporting world fan tokens building more community solidarity and belonging, with token owners being given the chance to vote on some club rules and guidelines. On the film distribution side, blockchain technology allows users to stream their content on platforms and be paid directly from their audience. And some notable protocols working to develop this emerging technology, and the metaverse, which is a bridge connecting the physical world to the virtual world, is at a stage of incubation. It's like a touch pool at the moment, where a little interaction can mean a big impact, setting ripples in motion, adding to new funding sources and even inspiration. The long-running Tether.tv has a NASA channel live streaming onto their platform, and they have added the first swap service using smart contracts, where multiple large files can be stored in a smart contract code, which is the size of about a tweet, through Bullet. And Bullet started out as a private file transfer facility, but with the partnership with Tether blockchain, they're hoping to access the opportunity to develop the Web3 world and the further work it will immerse in the space. Tether is created by YouTube's co-founder Steve Chen and Twitch's co-founder Justin Kan. And over the last 12 months, Tether is down 67%, but over the last 30 days, it is up 34% according to CoinGecko. Another one worth the mention is the new protocol M Content, and it's founded by Umair Masoom Usmani, based in Dubai. They're teaming up with PricewaterhouseCoopers to disrupt the global content industry with Web3 and the watch-to-earn content revolution. M Content team are currently in Miami this week for the conference, and they're ready to meet up with content creators to discuss how their protocol works. M Content has not been around for 12 months yet, but over the last 30 days it is up 15%. LiveP is a project you may have heard of, built on Ethereum's blockchain. The main aim of this protocol is to provide a fully decentralised video streaming crypto incentivised token. LiveP have an exciting grant scheme which also supports long-time community members to create a commercial which was debuted at the NFT LA 2022 festival last week. The price of LiveP is up 20% over the last 30 days, and over the last 12 months it's down about 29%. Contentos is another protocol which is focused on content, as its name suggests. Developed through investment from Binance Labs, it has over 60 million users and aims to decentralise the global content industry. Cos.space, Contentos' NFT platform, is now open for minting till the 31st of May for the pioneers who are whitelisted. And Contentos is also looking forward to a partnership with Bitfinity and their meetup being held in Vietnam shortly. The protocols also underwent their 7th scheduled burn of COS tokens on the 1st of April, where about 3 million COS were burned. The price of Contentos is down 55% over the last 12 months, but over the last 30 days it's up 36%. Thanks for your company on this week's Crypto Buzz. As always, this report is for informational purposes and to stir up interest in the sector for you to do your own research on. It is a highly volatile space with minimal regulation, so tread cautiously and invest only what you can potentially afford to lose. Keep watching Kalkine TV for more market insights and expert talks. Until the next episode, may the hodling continue.